Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst, Curtis Scouten, jumping into the charts here on July 1st. So kicking off the first day of the new quarter. Quarter 3 is currently commenced. And what has transpired in quarter 3 so far is a first positive day on the month. Now it didn't look like it was going to be a positive day because the markets were under pressure early in the morning. And if we simply take a look at this S&P 500 chart over here, this is where we opened over here. So this is where you closed. You had this opening candle over here, 10-minute candle. You sold off, and then you had a massive, powerful rally. And then the beautiful sell signal that you got early on in the intraday was this lovely intraday topping tail. So it was the highest candle on the day. And basically what happened after that is you had a rally and a failed rally to close above that candle, and you actually closed below this topping tail, which is a pretty remarkable thing. And that was where the selling just started commencing. And then you started to pop up. You made a little bit of a rally, inside bullish consolidation, a little bit of this wedge pattern, and then you broke out and it was off to the races. But the signal that you got for a potential rally that was going to ensue was this bullish reversal candle. So you had this 1, 2, 3, 4, 5 red candles to the downside, and then you got this complete bullish engulfing candle. Whenever you have a bullish engulfing candle, the probabilities do dictate that you have likely more upside ahead. As you know, buyers have stepped in. You've overcome that selling pressure by completely reversing the price action and closing above that previous closing price. So very interesting price action. The fact that you had a sell signal here and you had a buy signal here, just a little bit of intraday action. If we flip to where we essentially are trading, this was your original breakout zone of that inverse head and shoulders pattern that we were watching, or more of that cup and handle formation. You broke out, you've had to retrace back to that support zone, which is what we tagged over here. And now you did fill that gap on yesterday's candle. So the next gap fill that we are going to likely attack is this intraday gap just above the 4,000 level. So usually I do my analysis on the SPY charts, but this is the SPX chart, just to change it up for you, as I do have different analysis. They're the same things, but just different tools and analysis that I use on both charts to try to depict a broader analysis. So if we start building momentum, which it's looking likely now, and believe it or not, there's been so much pessimism now that markets are starting to price in a potential two consecutive quarters of declining GDP, with the Atlanta Fed's GDP tracker now showing that a recession is likely due to, I believe the newest numbers have come in showing that it's on track for a 2.1% contraction in quarter 2. So this is why we have been net short the market for a very long time. And honestly, it's weird how the market dynamics work. As soon as you get all this media flow about GDP contraction and slowing economy, we have been discussing a slowing economy for the last several months. And we have positioned ourselves to capitalize on so many of these trades. Now, we could have held out natural gas for a little bit longer, an extra 17%, but I don't try not to think about that because I do like to have some quality sleep at night, and if I think about that, I surely won't get some sleep. But nonetheless, we've captured so much profits on the energy side due to the fact that we foreshadowed this declining GDP, with oil causing so much demand destruction, being over $100 a barrel now for coming up on 5 months. This is actually month 5. So there's technically so many factors. There's the supply chains, there's the inflation, there's the debt markets, there's the bond markets being destroyed, there's equities being crushed. Obviously, all of these leading indicators in the stock market have been pointing to a declining GDP. And now that the media is finally getting a hold of it, this is where the last people have panicked out. I think this is what we saw over here as well, where people panicked out on this recessionary news. You had that gap down, and usually markets make a defined low once you gap down. So I do think the odd thing is that markets can stage a little bit of a rally from this point on, just due to the fact that smart money generally prices in all of these inflationary aspects, GDP contracting, and when the media finally gets a hold of it, it usually means all of that bad news is already baked into the markets, and I certainly think that is. And honestly, if we flip to the daily chart on the SPX here, you can see that we're You had a nice reversal candle over here. You had a sell-off, and then you reversed, closed at the high of the candle, which is really good. And the fact that you closed higher than the previous candle's high is a short-term bullish sign. So that's kind of what I'm leading towards. I do think you can now stage a rally up until this trend line around the 3,900 mark. That will be your first level of resistance. You can see that that's your parallel channel that you were trading in. We're now trading in a new downward parallel channel, which just has a steeper declining slope. But overall, your first level of resistance is going to be this orange line, which is your previous parallel channel. If you get through that, which I do think the markets have the ability to, I think you test this gap fill. I would like to see this gap satisfied, and I do think at that point it could be a confluence with, say the top end of this parallel channel. So look for potentially sometime mid-July. Obviously this point in time on my chart correlates on July 14th, which is around the Fed meeting. I think Fed meeting is 14th, 15th of July. But look for a potential rally. I think the rally is going to be short-lived, but you should get a bump in certainly some of our long positions that are on the table. So that's kind of where I am leaning my bias towards. I do think we get a short-term bounce. And remember, we are in a bear market. Well, scratch that. We technically, a bear market is minus 30%, which we almost satisfied at the end of Q2 with the NASDAQ being down minus 29% or just over. But it did dip its toe in there. If you were closing on the lows of the NASDAQ, we would be in bear market territory. So essentially, the NASDAQ dipped its toe into bear market territory, woke the bear up, poked the bear, and you never want to poke the bear. Whenever you poke the bear, it gets angry, and we certainly poked the bear with the NASDAQ dipping into that minus 30% drawdown, but able to rally up. So now we've just teased the bear, we're getting it angry, and wait till it starts falling into that territory again. So ultimately, the short term, maybe over the next 1 to 2 weeks, I think we could stage a little bit of rally, but this rally will be short-lived. We will certainly look to unload some of our longs moving forward. If we take a look at the QQQ, NASDAQ over here, the NASDAQ also finished up on the day, although it did lag the S&P 500. Notice how the S&P closed above its previous candle over here, but this one has closed inside of that wick. So short term, you are seeing a little more strength in the S&P. I think that's due to the fact that energy's got a small little bit of a minor bounce today, but same kind of price action. I do think I would like to see this gap filled around the 298 mark, but ultimately it would be a stretch if we get any higher than that. Certainly there's a lot of pessimism in the markets that people are certainly not going to stick around. So if you are in long positions, you could see some pretty quick nasty reversals where it tags this level or it tags a major resistance level and then it reverses off. So we have to keep being nimble in these markets and certainly take our trades at the best levels and opportunities. Let's take a look at gold, because gold was under significant pressure today. So gold had a nasty sell-off, basically tagged this support level, pierced it with a wick, but then got bought back up. So what an impressive reversal on gold. We did not pick up any more GLD because we are already holding a small position, and it wouldn't have materially impacted our average as much as I would have liked it to if we were to have doubled up our position in gold. There was too little downside in the movement of gold for us to increase our additional risk and exposure. So, but a beautiful reversal candle. So clearly there's tons of support there. The interesting thing now is that you did make a temporary new low. So that does state on a technical basis, since the chart has made a new lower low, since basically this cycle over here, we're talking about the beginning of the year before you had this blow off, it does stand that you could potentially have a breakout in gold moving forward. You do have this nice double bottom pattern. You got to retrace basically back to this original zone. You did pretty much negate this whole blow-off move from the Ukraine invasion. I mean, this was really the blow-off move from the Ukraine invasion starting on this candle over here. But nonetheless, that was a pretty big move, which you've done now a full round trip. And it is pretty strong that you got that nice bottoming tail reversal candle on gold. We were active in the silver space. So if we take a look at silver, silver had a nasty dump. And if we just simply zoom out on silver, we've been watching this double top zone over here since, basically when it was trading up at these short squeeze highs. We were thinking when you had a double top, you're likely going to go test the lower ranges of your channel. And since you were breaking key supports, this was your next zone to pick up. and look around the 1962 mark, and look at that beautiful bounce off of that level. And if you simply have this parallel channel where you have your pivots over here, your pivots over there, lots of chop over here, but you never ever confirmed above this breakout, so realistic, all this price action above this channel is failed attempts at breaking out, so therefore it doesn't really count as the major level of resistance, whereas these wicks do. Then you also have a pivot, another pivot, and then look what you hit today, a third pivot. So you are into support. You are oversold in the short term on silver. I do like that level that we added on via the SLV. So I do think we have a pretty good average in silver moving forward for any bounce. There is still a potential that you can come to around this 1872 mark. I will continue to add to our silver position if it comes into these pivot tops. You have major support. We're talking 1, 2, 3, your original breakout zone. You would have 4 levels of major multi-year support in this zone, and certainly it could come down to there, but I do think silver can potentially stage a rally coming soon, providing the economy doesn't deteriorate too fast. Now, there's kind of this catch-22 where I do think the economy is going to deteriorate, but it's going to be how hawkish or how dovish is the Fed. Do they pause the rate hike in September? The metals will sniff out any of the dovishness that the Fed throws to the market. So that's what we have to be aware of. Yes, the industrial side of demand for silver can be materially impacted by slowing economic growth and less demand, but the monetary side will sniff out that loose economic policy that the Fed instills. If the economy starts slipping into a recession too fast, the metals will certainly, like gold, will sniff that out pretty quickly. And that's typically how the previous cycles have worked. Taking a look at the oil chart, let's take a look at the WTI. WTI, not really much to report. You've had your nasty little sell-off back-to-back days. You had a little bit of a bounce off the support level. But overall, you're just making this bearish consolidation. I actually like to look at the weekly chart now in oil, because if we look, you've now had your 3 weeks down. You're having your 1 week of consolidation, and I do think you can potentially get some price action that chops in and around this channel before it breaks down. So that's kind of what I'm leaning towards. You get a little bit of a bear flag underneath this orange channel or resistance line that we've been watching for quite a while, and basically that should keep you in check for the remaining couple, maybe 1 to 2 weeks before oil breaks down even more. And I do think we're going to see another leg down in the energy trade, which is why we are short, and I am still holding that SCO. I believe all of us are at a great average, considering we shorted all the way up here. I would like to see oil consolidate. If it makes a beautiful bear flag, it just means that we will likely see a sharper move down, a more calculated area. And the beautiful thing is that just like we watch for bullish patterns, we also watch for bearish patterns, because we can also calculate the downside. And on a weekly chart, if we get this bear flag to just consolidate underneath this orange line, that's going to be a beautiful bear flag, a very technical one, which will break to the downside. Well, I shouldn't say will, it has a very high probability of breaking to the downside. So let's just continue to monitor oil. Obviously, natural gas did have a bounce. You ran all the way up to this almost $6 on natural gas, but the sellers were lurking and stepped back in. So I do think you can potentially have a little bit more downside in natural gas. You could consolidate just like we did over here and over here. You have very short term consolidation periods in natural gas, but you are coming into a consolidation period where if you break, it's going to be very interesting to see if this will be a level that holds. I do think we can get a bigger robust bounce if we tag the low end of this channel or even this 519 mark. But since we're consolidating over this, you'd really like to see natural gas move quickly into this level rather than consolidate over a couple days or a week and then move into the level. If it consolidates, the longer it consolidates over this level, the weaker this support gets. And then I would likely have to move to the low range of this channel. But very interesting price action. I do think natural gas heads a little bit lower, but there's still going to be buy the dip mentality as we break these key support levels. If we flip to the longer term weekly chart, notice how you are holding that 50-day moving average. I do think there is the potential that you hit this low range of this channel or even pierce that and hit this 100-day moving average. So let's just continue to monitor gas because there may be opportunities still to come on the long side. You know, whether you play UNG or Boyle, which is ×2, I do think that with the fact that you're on a 1, 2, 3, 4, 5 weeks of downside, if we get that 6-week downside, I'm going to be looking for a buying opportunity in natural gas.